Well, many of the top presidential candidates trying to hitch their wagon to the stimulus package.
As Rich Edson reported, Hillary Clinton, Barack Obama, and John McCain all plan to be back in Washington for the vote.
Yeah, all of them are expected to vote in favor of the bill, but if the proposal doesn't revive the economy the way it's supposed to, how's that going to play out in the campaign trail?
Our Fox panel is here to talk about it, including Biz Radio Network host Mike Norman. We have Tom Atkins from Remax Fairlawn, Nicole Ridgway from SmartMoney.com, and Peter Schiff, author of Crash Proof. Thanks to all of you. Nicole, what happens if the stimulus plan takes hold and then doesn't work?
Well, I think the voters and these special interest groups like the AARP are definitely watching very closely to see which way everyone votes. I mean, as their ad said, we're watching you. So, you know, I mean, if John McCain comes in and doesn't support some of these benefits for, you know, the veterans and the retirees, you know, there's going to be backlash for him.
Well, Tom, you got skin in the game. You got a lot of property all over the country.
Yeah.
Do you think, first of all, this thing is going to succeed? And if it doesn't, what happens?
No. But we have a $13 trillion economy. $150, $200 billion is like a tossing a deck chair under the Queen Mary.
But it's not just the rebates. It's lifting the loan limit of Fannie and Freddie.
That actually can help. So of all the things in this so-called stimulus package, that's the one thing that can actually help, because it takes mortgages out of the subprime difficulties and puts them into prime mortgages, which will easily get better terms, etc. I got to tell you, though, this isn't going to work. It's going to be good for Democrats. Why? Because every election is a battle between a Democrat's ability to lie, cheat, and steal versus Republicans' ability to tell the truth. This thing is not going to work. If it works, if it does work, they'll say, see, we were right. Spending money on stupid programs is wonderful. And if it doesn't work, they'll say, see, George Bush screwed it up so bad that we couldn't have fixed it no matter how much money he threw at it. And the truth is the Federal Reserve is 100% responsible for this. Screw them.
Hello.
I'm mad at him. I really am.
Let's bring in Peter Schiff here. What if everybody votes for it and says, we're here to help you, we're going to revive the economy, and then nothing really happens, it sort of peters out?
The stimulus package can't work. I mean, because they've diagnosed the wrong problem. You know, in the past, these stimulus packages appeared to work because we were able to postpone the day of reckoning. But I think, you know, I don't think we have any more time. You know, if consumers take these rebate checks, this freshly printed money or freshly borrowed money, and do exactly what Congress wants, they go out and blow it, we're just going to be in a deeper hole than we are now. They're probably going to have to go for another stimulus package before the election that also won't work. And I agree. I think the Democrats are going to win on this. I think they're going to sweep the White House and, you know, retake the Congress and the Senate with wider margins than they have now.
Mike Norman.
People like Peter have been talking about a day of reckoning for the last 25 years, and the very reason why the day of reckoning has never come is because the economy is growing. All debt rests on a foundation of real economic growth. It's irrelevant how much debt if you have the economic growth to support it. The only reason why this plan won't work, if Tom's right here, is because it's not big enough, which means that those in Congress who supported the smaller plan will be the ones held up to blame. And he might be right. The Democrats might be looked at as the ones who wanted the bigger plan and didn't get it. And
by bigger, you
just
mean
give
what?
everybody $1 million.
More stimulus.
Just give everybody $1 million.
Giving out more money in rebates?
You could give out more money. You could have more tax incentive for business. You know, anything that provides financial relief to the private sector.
Why would we continue to put pillows down where we think the economy is going to fall? Tom, this is a situation where you look at it and say, can we really make everything perfect all the time?
Well, no, but here's the thing. On one hand, you can't make things perfect. On the other hand, you can screw them up. And that's what happened here. You had a bad Fed policy. And let me propose a brief marriage between Peter and I for a second.
How many times you guys got married already? Aren't you going to stop?
But we keep getting divorced, Mike. I'm safe. Don't worry. I'm not going to the other side
yet. Haven't you learned your lesson yet?
No, look, the government spends too much money. And they spend it on stupid things that don't work. We become a socialist country.
Nicole, what about the fact that a lot of what is being done now has been tried before and hasn't worked? In particular, the rebates.
Well, I think that, you know, this is also sort of a desperate move. They have to do something to make people feel better. I mean, look what happened to John Sununu for not supporting the things for veterans, extra benefits for veterans, for example. You know, he kind of got villainized in his state. You know, I think that they're just trying to grasp at something. If this can curb the economy from unraveling further, then that's kind of the hope.
But it can't. It has to unravel because it's phony. Mike is wrong. We can't borrow money indefinitely and spend it on consumption.
Peter, businesses do it all the time. It's called revolving credit. Yes, Mike, it is. It's called revolving credit. Businesses tap into credit to invest and grow their business. Governments can do the same thing.
Mike, businesses borrow to invest in capital, and the capital produces a return where they can service the debt. You just can't borrow to take vacations and remodel your kitchens and say you can pay it back.
What are you talking about? By the way, the folks who run businesses, who run vacation places or who sell appliances and furniture, they feel the impact of consumers who don't frequent or don't go to their establishments. It works both ways. You have vendors and producers who need the income of consumers. That's how vendors and producers exist.
Tom,
Mike,
go ahead,
you've got the cart behind before the horse.
I know where you're heading here on this thing, but here's for eating and having a place to stay every night. The rest of our money is almost completely discretionary. You don't have to spend another cent. So all these things that you think we're just wasting money on, it's part of the economy, dude. We have this extra money. It takes 1% of Americans to make food for the other 99% of us.
The phrase of the day is, it's a part of the economy, dude. It's a part of the economy, dude. I love that. Thank you very much. Well,
will the Fed continue to reduce interest rates? Just chopping away with the machete. The last several cuts have had only a limited effect on the markets.
Yeah, let's ask our Fox panel about it if we can. Peter, first to you. I know you think the primary concern is now and should always be keeping inflation low and maintaining the value of the dollar. But doesn't the Fed have some interest in growth in the economy?
Well, there's nothing the Fed can do. All they can do is print money. That doesn't create economic growth. The people do that.
So why do they have that mandate then?
They shouldn't. That's a problem. They shouldn't have that mandate. There's nothing that they can do. The individuals create wealth, and we do that when government is small, when regulations are few, when taxes are low. Unfortunately, to answer your question, they're probably going to keep cutting interest rates until foreigners stop it, until the last remaining bubble in the bond market blows up because the rest of the world says no mas. And at that point, we're going to be forced to have higher interest rates. And it's unfortunate that we're going to have to face this problem.
The government is paying 2% interest on its debt right now, anywhere from 2 to 3.5% on its interest right now. Foreigners are gobbling up this paper, which you keep characterizing as some kind of worthless piece of junk. You're absolutely wrong. Furthermore, the Fed doesn't create money. The Fed sets the cost of credit. Money that we call money is created in the banking system. It is credit money, and it's precisely the point.
One of these days, you got to learn something.
It has not been able to stimulate the creation of loans. That is a problem inherent in the banking system.
Can I say what Charles Plosser, the Philly Fed president, has said today, and that is that by cutting rates, thinking that's going to help growth, that's a damn the torpedoes, throw everything at it, including the kitchen sink effect. And he said, ignoring inflation during times of economic weakness, quote, risks undermining our ability to achieve economic growth over the long term.
That's absolutely not true.
No, he's absolutely right.
Agrees with Peter.
He's right. He's right.
I'll tell you why
he's right. Hang on, Peter, calm down, dude. I'll tell you the reason why he's right. Because the Federal Reserve's first job in this case is supposed to create real money. So you can count on it being the same as today. It's fairly a year from now, 2 years from now.
No,
once you get, yes, it is. Once you get inflation, it undermines the value of what you're doing today and changes the way you plan and the way your economy grows. In fact, you end up growing negative sometimes. You have too much inflation. So the problem you're running into now is that the Federal Reserve damned itself. It screwed up and made 4 major mistakes, and it did them all in a short period of time. They took too long to bring rates down after 9/11. They took too long to bring it back up after the recovery started, and then they raised them too fast. So they went from 1% to 5.25%, a 525% increase. And this thing about the idea about fraud is stupid. I'm going to send this message out to any senator who thinks this is all because of fraud. There's always been a degree of mortgage fraud for the past 50 years. It hasn't changed a heck of a lot. What changed was you had adjustable rate mortgages that their indexes went from 1% to 5.25% inside of 3 years. Now, it's a 525% increase. They created the bubble. The Fed's wrong.
Hold on, Peter, hold on. We're going to let Nicole weigh in on this. Now, Nicole, with all of this negativity or negative talk about the Fed and what it does, why do we have a Fed? Why don't we just have a currency board and just have a gold-based dollar as we used to?
Well, the Fed's around to sort of keep inflation in check,
but they're not.
But they're not keeping it in check. Exactly. And by continuing to cut the rates like this, I don't think that inflation's going to keep going, keep escalating, and we're going to have people who, the lower income people can't get access to that cheaper credit because the banks aren't loaning it to them. So, they're tightening their lending standards, and they're not going to get access to that money to spend that money and pay for these more expensive products like food and oil.
I got to bring some perspective in here. Look, all central banks operate on this paradigm that you can't have long-term sustainable economic growth without low inflation, but it's absolutely not true. There is no empirical or theoretical evidence which says you can't have growth.
Hong Kong did it. They had a currency board.
Look,
except for the
second. Let me get it. You had countries like
Zimbabwe.
Turkey had 1,000% inflation. The economy was booming over there. Inflation is an annoyance, but you can't say you can't have economic growth. In the 1970s,
It's a good thing you don't have any clients, Mike.
In the 1970s, we had
It's
what we
more than
call
an
very
annoyance
big,
to your
very
clients.
high inflation, double-digit inflation. The economy was growing. The economy went into the deepest recession since the Depression when Paul Volcker put interest rates up to 20%.
The double-digit inflation began at the end of the 70s.
And we were growing. We were growing. Volcker's actions to crush the inflation by jacking up rates to 21% gave us
He
the
had to
worst
do that.
recession since the 1930 Depression.
Look, he had to do that
Why?
because of the foolish policies of the 1960s and the 1970s that we're repeating right now.
The 70s,
and if you
we had
think,
two
hold
oil
on, let me finish.
embargoes.
1 second.
If you think inflation is just an annoyance, you ought to have clients like I do. You ought to be helping people plan for their retirement and tell them that inflation is just a nuisance. Inflation destroys people's futures.
You're
it wrecks
such a
their
wonderful
retirement.
money
It
manager. I
undermines their
thought you're
savings.
making money for your clients with
I am.
inflation. They're happy with
No,
it.
no.
In fact, if inflation goes down, all your fancy gold investments and short dollar investments, you're going to lose everything and go right back to where you were before.
quick last
I'm making
statement
my
by
clients
Peter. Go
money
ahead, quick.
because I'm helping them avoid the inflation. But unfortunately, most people don't have accounts with me. They're being slaughtered by inflation because they're not getting out of the dollar.
That's the last word
It's driving
from
me crazy.
Peter. Thanks, folks. Well, volatile time for the markets. Are up one day, down the next.
Can we expect more of the same until the presidential candidates are picked? After all, Wall Street hates uncertainty, but then again, it also climbs the wall of worry. Let's talk to our Fox panel about it, including now Pat Powell from Powell Financial. Everybody, Pat, I'll ask you first. What would settle these markets down, or do we even want them to settle down?
Well, for traders don't want them to settle down because traders can make a lot of money in these markets. Investors, though, want to have a more normalized kind of market in here. I'm not sure anything specifically will settle them down, but certainly the uncertainty of the economic policies of the various candidates is not helping. You go from one extreme on the Republican side, you have Huckabee's fair tax, which is essentially a sales tax, very European of him, and on the other side you can go over to Obama, who basically wants to raise the payroll tax, which is really insane when you think about it, because what that's going to do is there's going to be a whole bunch of jobs that get exported. It happens every time you raise the payroll tax. He wants to eliminate the cap on Social Security. So these candidates have very different economic policies, and the market can't quite figure out which way to go.
So, Mike, how much of this roller coaster market is due to politics?
I don't think any at all. I think,
Zero.
No, I think it has to do with what started last July with the implosion of the subprime and the problems with the banks, and every day, an
So they
announcement of
ignore
somebody
Wall Street. They ignore Washington.
Yeah, well, even look, what difference does it make? Because policy is not being enacted now. Well, maybe the stimulus will be, but new policy based on a new president won't be enacted till mid-2009, maybe second half of 2009. But here's one thing to consider. When things are quiet for a long time, they tend to get crazy. We're in the crazy period. We've been in it for a while, so they tend to get quiet. I have to think that with the rate cuts and probably with the stimulus package, the market will start to settle down. We'll start to retake that trend moving higher.
Peter, we don't have any clear winners from last night. We still have the big four names here, and there isn't a lot of clarity about that. Does that matter to the markets?
I don't think so. I mean, I think there's a lot of certainty out there. It's certain that one of those four is going to be the president. Most likely it's going to be Hillary or Barack. And I don't see much difference between the two at the margins. I don't even see much difference between the Republicans and the Democrats. There's minor differences, but on the grand scheme of things, there's not enough difference. And, I think the volatility will continue. Unfortunately, for most people, down. I think we'll have lower lows and lower highs. But I think, it's going to continue after the election. And I think the real losses are going to be much greater better than these nominal losses, because behind the scenes, the dollar is going to continue to weaken. I expect another major leg down in the dollar before the election, and that's going to undermine the real returns on U.S. stocks.
But, Tom, I had a guest on Scoreboard the other night who said, you know, Washington, D.C. is kind of like a mosquito on the back of an elephant. You know, the elephant won't even feel it if he's bit by the mosquito, or stung by the mosquito. So it doesn't make that much of a difference. It keeps plowing ahead, doing what it's going to do regardless.
Look, we'll raise taxes 30%. You'll see how big that mosquito can finally get.
Right.
And here's something I think is important. I think if I look at Wall Street over history, the one thing that scares Wall Street worse than uncertainty are stupid idiots running the country. And right now, I think we have 4 of them who are economic idiots, including, by the way,
John McCain?
Romney. He's supposed to be this economic. Nah, look, none of the guys want to do what you have to do. Cut spending, cut taxes, get back to reality of running a country right. And
John McCain's talked about cutting spending.
Yeah, after he went against tax cuts, which, by the way, always produce.
Absolutely. John
McCain
talked about cutting spending. For the first time, though, I actually understand Peter. For the first time, when he said that he thought the winner was going to be either Obama or Hillary, now I understand his pessimism, because when you look at the economic policies that will come out of those two campaigns, you can see that we're going into not a recession for 2008, but a very serious economic decline in 2009 and 2010.
Why would a guy like John Mack from Morgan Stanley or even a Warren Buffett support Barack and Hillary? Well, at least Hillary for John Mack.
Well, you know what? They're in a different position than I am. They have gotten theirs already. And so we don't have to worry about what we're all doing. I'm really talking more about what individuals have to worry about. When those jobs get exported, and those are really good jobs, it's not going to be Warren Buffett's job. As much as I think the man is brilliant, it's not his job that's going.
And capitalism is so incredible, and American freedom is so great, that people who are, frankly, economic idiots can make $1 billion in this country and not even realize why they made it.
Wait, he's not an idiot. What are you talking about?
I think he's a flaming idiot.
Who?
Warren Buffett?
Buffett?
He's a Democrat who the Democrats have stood for raising taxes and whizzing money away on stupid programs that don't work for 50 years.
He's probably the smartest stock picker.
He may be a
history.
smart stock picker. He may be able to have all kinds of pull apart charts and graphs and say, oh yeah, they'll buy that and be right, and have no idea why those companies created wealth in the first place.
Nobody is proposing a rollback of capitalism. Come on, we have private property. We're talking about maybe raising taxes back up from 35% to 39%. Big deal. Nobody's talking. What we should be worried about, and where one of the most important growth areas of our economy right now, where it is in the export sector. What we should be worried about is trade policy. Look at the candidates, the ones who are very sort of, anti-trade, wanting to roll that back, put up barriers, maybe tariffs. That's the sort of thing that could really, really throw us into a very deep recession.
That's actually, hold on that one point, Peter. He makes the same argument that a lot of people. Robert Rubin, the Treasury Secretary under Bill Clinton, who was a big free trader, said he's worried about protectionism, not just with the other party, but also with Democrats. There's not one free trader that he sees running for president right now.
Well, I'm not worried about Congress enacting protectionist legislation. I mean, that would be a problem if they did that, but I don't think they're going to do it. Unfortunately, we're going to have tremendous problems anyway, because our trade problems are a result of the fact that we can't pay for our imports. We're importing $60 billion a year worth of real merchandise and exporting paper money, and that's not going to continue.
Who's got the better deal in that? No. We have foreign countries who are giving us finished products that we use and consume to make our lives wonderful and
they're
happy
going to stop doing that.
And we give them a piece of paper, which you say anyway is worthless. I mean, it seems to me that we have the better end of the deal.
I know it's going to stop. We do, Mike. We do have the better end of the deal, but they're going to stop. They're going to push us off the gravy train.
Well,
we gave them a bunch of subprime mortgages. Let's get back to the issue that we were talking about, and that is when and what will it take to see a little bit of calm and sort of cool-headed prevails type of behavior on Wall Street? Well, to the extent that the election is mattering to Wall Street, I think you're going to have to get a front runner in each party. That may be John McCain, that may be Romney. It looks like McCain at the moment. In the Democratic Party, you can't really tell at this point who's going to be in the lead. And what will happen then is Wall Street will figure it out, where to position itself for different economic policies. Right now, you have a lot of uncertainty. Tom, what scares Wall Street the most about what politicians could do?
I think either raising taxes or overburdensome government. Both of those things. Well, I guess the taxes go along with being the government involvement scares everybody who's got any money on the line.
I think it's a trade issue. And I don't think anything from a political perspective is scaring Wall Street right now. However, let me say, politics, if you want to think of what is the most important thing governing you got politics at the top. We don't live in an economy. We live in a political economy. But let things flesh out. Let's have the election. Right. Let's see what the policies are going to be. Then we got time to work.
The market is not going down because of the election.
Coming up, a whole new story. We're down to the wire in the stimulus package with lawmakers trying to add their own pet projects in at the last minute.
Will the bill end up too loaded down with pork to stimulate the economy at all? They keep adding like little bricks of money. Let's talk to our Fox panel about it. I don't know. What do you think, Tom? Do you think that this is going to come to fruition really soon? Like the president has said, I want it done in a timely fashion?
I've looked at the bill, and it's a $205 billion bill, and I've discovered there's $205 billion worth of pork in this bill. It's the stupidest thing. Now, if you want to change the economy really fast, cut taxes, cut some of the spending out of our budget. There's tons and tons of quote-unquote discretionary spending on. Hold on a second. On stupid. There's so much junk in our tax code that they get rid of. If they wanted just to stimulate this economy, all you have to do is cut the tax rates and cut the spending, and you'll see this economy go crazy.
I mean, I pose the question, what about people who don't pay taxes, who are at the lower end of the income scale, who are really hurting right now, who maybe are going to lose their homes or whatever, maybe losing their jobs, unemployment is climbing up. I mean, don't you want to help those people? I mean, people who are high earners. Yes, if you cut. Look, it gets back to this trickle-down approach, and I'm not saying it doesn't work. It worked in the past, but it takes time, this trickle-down, to flow down into everybody. I don't, what we're trying to do here, at least from what I understand, is get a quick stimulus into the economy to stave off a recession. The Fed's doing its part. We're trying to get this stimulus in here now. So I don't know if you go with these big, grand tax cut schemes and expect that's going to have an immediate impact.
But, Peter, it's called a stimulus package, not a welfare package. Sometimes there's nothing wrong with welfare, but it's not a welfare package. It's a stimulus package. But,
Dave, you got to look at what we're going to stimulate. We're going to stimulate inflation. We're going to stimulate the budget deficit. We're going to stimulate the trade deficit. We're not going to stimulate the economy. We're going to make the economy worse. I mean, yes, Tom is right about one thing. If we want meaningful stimulus, which is not what politicians want, they want re-election, we got to suck it up. We got to suffer through this recession. But what we need is to make government smaller. We need meaningful spending reductions, meaningful reforms and reduction in our taxes, so that we can dig our way out of this gigantic hole. That's what we need to do.
David, you have it exactly right. And I have been in favor of this stimulus bill all along. I've been in a minority, but they are turning it from an economic stimulus bill into a welfare bill. And it's we also have the President of the United States who said, "You start fooling around and do this stuff, guys, I'm going to veto it." So we don't even know whether it's going to come through.
Hey, Pat, one person's welfare is another person's income or revenue. If you run a small business and you don't have any customers because they don't have any money anymore, you're in trouble too. But if suddenly you have customers coming back,
one at a time.
There's a fundamental flaw here in the argument, Michael, and that is this: that if you just give people something for nothing, you don't reward them. If you cut taxes and you cut spending, that creates a better business environment, which creates hiring more people to work, which worked just fine for the past 5 years.
Peter made an interesting comment earlier. You kind of slipped through, but you said that if they pass this stimulus bill, then we might even need yet another one later on, right before the election. What gives you the sense that would happen?
We're not going to need one.
You know what I mean, that it might happen.
But they're going to do it because the recession is going to come regardless of this package. In fact, the package might even make it worse by exacerbating our imbalances. And so they're going to have to probably come up with a bigger stimulus package. And these politicians are going to jump. They're going to compete with one another. Who can give out the most goodies? That's how they're trying to get reelected.
We tried. Look, one at a time, Mike. We tried Peter's approach. It was called the 1930s. It didn't work. Okay, and that's when we figured out that we have a better way. It's a counter-cyclical fiscal policy. When the economy, when the markets go down, the government
throw out those
steps in, it raises spending. Hey, since the Keynesian approach, we haven't had depressions in the world anymore. In fact, the only bad downturn we ever had was, again, with this Volcker raising rates up to 21%.
Tom.
You keep rewriting history. You better learn from it.
Tom.
You two kids, stop it now. Let me rewrite a little history now. What you need to do is you have to create good economic policy at the very core. Good economic policies always create a better economy, which hires more people, which creates more income. That's the that's why a welfare stimulus package like this is silly. It's better to create better long-term economic policy.
Patricia has an interesting approach. She doesn't rewrite history; she reads it. Go ahead.
And, you know, quite frankly, a stimulus package does work because what we're concerned about is 2/3 of the economy is driven by consumers. If the consumers pull back in here, we could tip into a recession that we're not yet in, guys. There's no numbers to support that we're there yet.
Not yet.
So
Sure.
Not yet.
Well,
So
consumers have to pull back. That's the point.
We're trying to head it off a little bit. If you go crazy in here, which is really what's happening in Washington, you can do more harm than good, and that pushes me a little bit more into the camp over
but
here.
remember, consumers have to pull back. That's the problem. We've spent too much. We've borrowed too much. We have to stop. We have to save. We have to underconsume.
Peter's right on this, but here's the thing. Yes, he is. He is on this.
According to Tommy, let's hear why.
If you create more net income, it's not so much of an issue. And that's what we did for 5 straight years. We had 10% annual net income growth, which fueled this incredibly great economy. It was real growth. What happened was as soon as we had the subprime mess, which was caused by raising rates too much too fast, then we had ourselves almost to a recession where the economy ground to a halt.
Mike, go ahead.
That's not what caused the subprime
Adam Smith,
problem.
the great economist, I'm sure even Peter loves Adam Smith, said the wealth of a nation depends on the availability and the cheapness of its consumables. It's indeed how we raise our standard of living. There's nothing wrong with consumption.
No.
You seem to
Mike,
think
we
that,
have to produce the goods first.
Why?
Sure. That's what
Do you produce the electricity that goes into your home? Do you produce the food that you buy from the supermarket? Do you
Somebody
make the
produces
clothes?
it.
Wait a second.
Mike, a
do you
farmer
make the clothes
produces
that
it.
you wear? Do you provide the medical services that you need? Do you provide the legal services?
That's enough questions.
Somebody produces them. That's the
You need
point.
to create the income in the first place to buy the stuff. You could have cheap goods, but if there's no income to buy it, you're not getting anything done. That's why you need to create more income.
Individuals have to save. Individuals have to control
Supply
their debt.
creates its own
The government does
demand.
not have to do it. The reason we have to live differently than our government is we have a terminal point to our economic activity. We're going to retire at some point.
Remember,
all right?
supply creates its own
The government is
demand.
never going to retire. So the government does not have to have a terminal point to its economic activity. The deficit can go on forever.
Exactly.
Mike has it right.
All right, that's it.
He
We got
never
the
has it
final
right.
word from Patricia, and a new alliance is formed. But tomorrow is another day. Who knows? Every day it's different.
Oh, well, while you were talking, guys, the market is down, and you see with the Dow Jones Industrial, I said NASCAR. Industrials are down.
Well, if you care about your pets in that incident where that dog food and cat food was killing so many of them, dozens of animals were killed, you'll be pleased to know that there are indictments now of three companies, 2 Chinese companies whose names I'm not going to even try to pronounce, and the Las Vegas-based Chemnutra Incorporated, charged in 2 separate but related indictments about those incidences.
Okay, and let's look at the markets here. We're about 6 minutes away from the close. The markets have turned lower in the last couple of hours, and we're seeing an acceleration to the downside with the Dow Jones Industrials lower by 75 points. Even Disney's come down. It's still up about 4 1/3%, but it had been up much higher. And so we've got weakness with McDonald's, 3M, Merck, Pfizer, AT&T, and it's a tough day overall here. ExxonMobil down $1 when you see oil pulling back too, David.
And we should mention that NASDAQ is down by about 3 times as much percentage-wise. It's down 30 points today, off about 1.5 percentage points. So it's a bad day for tech stocks as well. Let's call in our Fox panel to talk about it. Pat, what's going on?
Well, I think this morning you had to pay attention to there were some pretty poor productivity numbers, and there's also pressure on wages on the way up, and that's inflationary. And I think there's some fear.
Let's just mention, by the way, productivity numbers means the amount of stuff that can be produced by people and how quickly they can produce it.
And that's been really good for us. We've had great productivity numbers, which is why the inflation numbers have been so moderate as we've gone through these higher oil prices. But if we're starting to lose productivity and there's pressure on wages, it's going to put pressure on the Fed not to give any decreases in interest rates. So I think the market has to be concerned about that.
Yeah, but the dollar was lower too, and that's always certainly an indication that it's not today. I mean,
since the Fed cut rates, that last 50 basis point cut last week, the dollar has rallied several percent against the euro. It's actually firming up.
Why?
It's probably oversold. The dollar probably needs to bounce. I don't know if that's the start of anything big, but a lot of people, I think including Peter, said that with the rate cut, the dollar was going to collapse, as he said.
It will.
It actually went the other way. It's still
Wait, did I just hear it will? Peter, you can say that for the next 1,000 years, dude.
Well, hey, you know, look, my timing has been great for me and great for my clients. I know you guys are talking about. You know, we talked about it yesterday. Look at gold. Gold has recouped better than 50% of yesterday's losses, whereas the Dow is down again, and it's going to close on the lows again. This is lousy technical action. It typifies a bear market.
But you know what? There are other ways. There are many ways, Pat, to make money in a market, not just by jumping into gold if inflation's high and the markets aren't looking that good. I mean, you know, Sandra Smith was here talking about certain ETFs that short certain indices.
Absolutely. You can short using ETFs, but you can also take a diversified portfolio approach, which is what I tend to do. And I do have gold and commodities in a portfolio, and in a period where the stocks are having some difficulty, you can offset that with some earnings out of your gold and your commodities. So a diversified portfolio can really help.
You know, also on the productivity, you know, the reason that inflation appears to be in check, and it only appears for people who are looking at these government numbers, it's got nothing to do with productivity. The productivity numbers are also kind of phony. It's because of government accounting. Inflation is not in check. It is out of control.
It's been that way for years.
You know, Peter, you are absolutely entitled to your own opinion. What you're not entitled to is your own facts.
No, these are the facts.
So you really have to. So you have to get over that. We don't live in
I have
Peter
the facts
world.
on my side.
We live in a world where there are.
Did you look at the polls?
Excuse me.
Did you look at the exit polls?
Just a moment. I will tell you this, Tom. You can't tell us there's no inflation. You know, Charles Plosser of the Fed, Richmond Fed, is saying this is a big issue. Anybody who goes to a market sees it's a big issue.
And the Fed created this. They put themselves between a rest. They did. They put themselves between a rock and a hard place. They mismanaged it. They didn't do the job right. They mismanaged it. They crushed the housing market. Now they find themselves caught between two things: rescuing the housing market or controlling inflation. They can't do both.
However,
I want to get back to the reality of inflation.
Hold on, Peter. Explain to us for a second why it is important that when you improve productivity, there is downward pressure on inflation.
Yeah, because you get more output of goods and services, you know, per hour of workers.
And so when you have computers and stuff that allows us to do that, it's better for the whole
economy. That would be true if it were actually happening.
Hold on, Peter. Go ahead.
It's not happening. Right, and this is a very important point because while we see food and energy prices rising in the headline inflation numbers, in the core we don't see such an increase, and it includes items like productivity enhancing equipment like computers and software, which allow us to be more productive and enable us to keep ahead of inflation. You're absolutely right. Look, we can't eat computers, it's true, but let's understand something. This inflation problem that we're talking about is really an oil problem. We've seen oil go from 10 It's food.
It's a money creation problem.
The whole biofuel thing going on. So we're using our corn and our other commodities to produce fuel.
You have it right, and the moderating thing has been up to this point productivity numbers and exports.
You guys can rationalize this.
Numbers are slipping. It's going to be inflationary, and it's going to make the food and oil inflation much more important.
You guys can rationalize inflation away all you want. Meanwhile, you know, I'm investing in all the things that are going up because of inflation.
That's
so you can, you can ignore it to your financial
Peter,
peril.
I've been listening to you for 15 years.
You haven't been listening to me for 15 years.
This year, once.
But if you had been listening to me, you'd be very rich.
Actually, gold has been a very bad hedge against inflation. Stocks over history have performed far better than gold. Gold has been a terrible hedge against inflation.
Very recently.
Very recently. You're absolutely right, Pat.
Here we go. The market is closing. We're about 15 seconds away from the closing bell. There it is. The Dow stumbles, falls by 70.